All right, here's the high impact news driver today, or it's a medium impact news driver at 8:30. We're gonna start here. I haven't really been studying the United States dollar or like interest rates or just these different pairs that are inversely correlated to NQ and ES and all that, right? So what I've done here on the monthly is I've mapped out a range from the most recent low to the most recent high. All right, and let's go down to the weekly. All right. And so keep in mind we're on a higher time frame chart. These algorithms are trend following in nature. And what we should be seeing here, because as I mentioned, my bias is bullish. So if my bias is bullish, then on the United States dollar, which is inversely related, I would be expecting that to be bearish. Now there's one thing that I notice here, right, which is the fact that we had these lows form and this sell side was taken. When that sell side was taken, seems that the US dollar index moved into a buy program where it was continuing higher and higher, and this whole portion would actually be, you can see, about halfway through the year, right? We're here in July. We know that at the end of the year, things will begin to decline for interest rates. They'll start the year very bullish, continuing higher. And the reason this is relevant is the US dollar is inverse or opposite to interest rates. So looking at halfway through the year, price starts going into that buy program of continuing higher and running out these highs back here. Now price stops. What does it do when it stops above these highs? It consolidates. What does it do after it consolidates? Begins moving back into a discount. All right. So now there are stops below this old low here. All right. In terms of, maybe a order block, let's see. Right. So if I really had to say, what am I expecting price to gravitate towards? It's two different things. Okay. So the first of which is this here. You have to keep in mind that this is a technically an order block in the sense that this is the last down candle before the up move, at least on those higher time frames. But even here, right, we can reasonably expect price to trade to this low back here. And the main idea here is, where are we looking at price and where has it came from? Ultimately, on the US dollar, we're expecting lower prices. We pair that with the seasonal tendency in the interest rate market, right? Which, give me one moment. We're going to go to 10-year, right? So, the interest rate market is generally bullish in the first half of the year, and we can show that here. All right, there was a decline from around January to March, and then price drove higher to the buy stops that I created here, or these old highs, these old untested highs, to take out those buy stops. And afterwards, we had our seasonal decline, which starts here in May, around, let's see, so around the middle to last week of May, we have that break in structure. And price continues for the rest of the year, going lower until the last 3 months, October to now. We've seen price continue higher. Now, one thing we have to keep in mind is, while the US dollar is inverse to this, right, or the US dollar is different in the sense of it acts completely opposites, or absolutely opposite to interest rates. You can see here that there is a correlation between how interest rates move and how the E-mini S&P and NASDAQ move. So if we look here, bullish, okay, 10-year, ES. 10-year. Higher prices on both. Here we go. Even Dow Jones. How about Dow Jones 10-year? All higher, right? So the main thing I'm pointing out here is when interest rates are going higher or moving higher, all right, the other opposing assets or related assets are continuing higher. So here's what we're framing. On a higher time frame, the US dollar has been showing a willingness to move lower. So that goes in line with my bias on the E-mini S&P and NASDAQ. We paired that with interest rates, and we look here, we see, well, price created a low, and that low formed around mid to late October, and since then, it's been going higher and higher. Right here, level of buy side from here, level of buy side here, here, different untested highs, right? Ultimately, there's no reason we'd expect price here to drive or just turn around, although we can see the candles begin to consolidate, right? Same thing here, consolidation before that expansion move. May just see price trade here and then continue lower, but keeping in mind that as of now, till we show an indication price wants to go lower on any of these, we're going to be expecting higher prices until then. Till we have indication that price wants to go lower, no matter what. So, what's the next thing, right? Well, let's go back to, now that we have that outlined, bias bullish for the monthly on ES. Bias bullish for the monthly on NQ. We go to the weekly, bullish. ES, weekly, bullish. All right, let's go down to the higher time frame chart. The higher time frame chart is the chart that I start from a day and lower up to 1 hour. Here we go. Daily candle closed higher, so my bias was correct. Daily candle closed higher, bias was correct. Disregard this candle. It's 11:14. That's Tuesday's candle. All right, so daily bullish. No indication to expect price lower. 4 hour. Okay, here on the E-mini S&P. Now, what did I mention about the consolidation, or what I was expecting at this high? Relative equal highs formed here. I said that I expected these to be ran. I made it very clear. I forget which video. It was one of my last two. Very clear that I expected price to move here. It did. That's where I was anticipating price to reach toward. Why? Because it's a untested high on the monthly and a consolidation. Now we're above that high, but we were, down here. Some were down here at the time. I believe that was Friday or Thursday's video. Maybe even the most recent one I posted. But regardless, these buy stops were taken. So, if price is consolidating, we can see it now target these stops. But obviously, with it moving to the side like this, it's not expanding either, right? Same thing here. I mean, sure, we're trading higher. We're trading above this level of buy side. These are relative equal highs with these wicks. All those highs or all those stops from a lower time frame, even lower than this, where this is more refined, get taken. Classic retail resistance idea, resistance being broken. And what do we know as far as liquidity traders? Well, above here, there's liquidity in the form of buy stops. So smart money who, got their long positions in at an old low, right, will look to liquidate their positions to the counterparty of willing buyers in the form of buy stops to buy their long positions that they accumulate down here and here. So, 4 hour bullish, but also having the idea that we are in or above a higher time frame range or high and can reasonably expect price to consolidate now that that level of liquidity has been taken. We show the same thing here, but the reason it's trading up here is to take these buy stops, and same here. All right. So that's the idea for that. How about the 1 hour? Well, here's us starting the week. Look at this, sideways. It just gets more refined, sideways, right? This price action is not showing that it wants to go higher aggressively. It's not showing that it wants to go lower aggressively, right? It's creating these different lows, violating these highs. So now we can reasonably expect, since the liquidity here has been taken, the most now efficient place for the market or the price delivery engine, the engine that drives price to target, would now be these old lows in the form of this low and this low. Let's go now to the 15-minute chart. And you know what? I'm gonna say something. It's 11:18. I'm gonna mark my words on this. After this video, I'm gonna go take some caffeine. I'm gonna take some caffeine at 11:18 at night, and I'm gonna finish another ICT video. And I'm gonna do that every fucking day of the week. And I'm gonna do it whether I want to or not. And mark my words, by the end, right now, I'm gonna do video 8. By the end of this week, we're in 5 days. I'll have completed 5 videos. So I should be, I have to do video 8, 9, 10, 11, 12. So I'll be on episode 12. And the month I'm on is the last long month. Be around 6 videos after that, I believe. I think it's 18. But anyways, I'm going to get 5 videos done this week. That's a goal. I have not been restrained enough, or I haven't been as disciplined as I need to be. So anyways, that's what I said I was expecting for the higher time frames. Now we're on the lower time frame. We're here on the 15-minute. So let's go ahead and see, how today's range moved. So from this low, all right, we start the day with the New York open price here. Price instantly trades lower here, tricking traders into thinking that price will, in fact, be continuing lower. And then we have this failure swing here. We have this aggressive run or displacement above these relative equal highs. These are the London highs, considering that they formed at, well, not here exactly, but here. London highs formed from 2 a.m. The London lows here. We know that we are in a market that we are expecting higher prices for. So as soon as we can then recognize this as a Judas swing or the false move, and then see the breakout above these highs here, then we can see the return to that right here, returning to an order block. This little consolidation here, all these different up and down candles, but the last down close candle before the up move. Price returns to that order block, then continues in the direction of our bias, which is higher, and then continues back above these highs for a more aggressive run. And then after it creates this high, these are all two equal highs for the day, then closes lower, and we have this now consolidation. Now bear in mind, quick movement here. What is this? Is price traded on either side of the market when it traded up back here? No. It's only traded on one side of the market. So this is a fair value gap. Additionally, we now have this low, and more importantly, these lows back here, which now have sell stops below them, or stops below them. So smart money who accumulated short positions from here will look to drive price down to close their positions to the stops below here and pair those orders with people who are willing to buy those sells. So from here, that's really all that needs to be said about that. Let's look. What was this? 8:30. And I gotta wrap this up because I really do gotta study. 8:30, 8:30, 8:30, 8:30, right here. So you can see this wasn't necessarily influential. 8:30, price did its thing, and then this is the equities open. The equities open drives price above those highs. We see a retracement into the consolidation before the expansion. This was the breakout of this consolidation, right? We see a return back to this consolidation, but also this last down close before the up move, and price does not trade past the equilibrium price point of that. And afterwards, we see that aggressive movement to the upside. Now, when does this happen? This happened at 11 a.m. specifically here. So, with this in mind, I wouldn't have, placed a trade at that time, but we are also just looking back. I mean, we are in a consolidation, and more importantly, we're above these highs. We're above the only level of liquidity that I was expecting price to draw to outside of a higher time frame high. So taking note of that as well. But to summarize my analysis as of now, currently bearish on the US dollar in correlation with interest rates and where I'm expecting interest rates to go, which is the same as where I'm expecting the E-mini S&P and NASDAQ to go, which is higher ultimately until we see the indication that price wants to move lower. On these pairs, I've noted the daily high, the daily low for each ES and NQ. And ultimately, today has close and higher. My bias on all higher time frames to lower time frames is bullish. And even on lower time frames, I can frame the idea of where I'm expecting price to draw to before it continues higher. And ultimately, I'll be looking for a shift in market structure, at least on higher time frames, and refining my understanding on lower time frames. So I'm going to leave it at that.